Borrowing power. You've probably used a few online borrowing power calculators to get an idea of what you could potentially borrow. The only problem is they're not very accurate. Our How Much Can I Borrow calculator uses the same methods used by the lender's credit departments and compares your borrowing power with several lenders in one go. Generally, we recommend that you use online calculators as a very rough guide and you get a pre-approval to confirm the amount that you can borrow. So what is the right amount to borrow? It's a highly subjective question. A lender's borrowing power can give you an idea of how much you can spend, but how much are you willing to spend? How much are you comfortable borrowing? The trick is to work out your repayments using an interest rate that's 2% or more higher than your actual rate. If you feel comfortable paying that, then you'll likely be fine, but you can use a higher buffer if you like. When lenders calculate how much you can borrow, they assume interest rates rise by at least 2%. The banks do a lot of things we don't like, but approving loans for people that can't afford them just isn't one of them. Consider if your circumstances will change as well. For example, having a baby may be challenging for your finances. 3 essential tips to improve your borrowing power. Number 1, reduce or close your credit cards. When assessing your loan application, banks assume your credit cards are fully used. Because of this, reducing your credit card limit or cancelling some of your cards will give you a boost to your borrowing power. This is the easiest thing to do. For example, reducing your credit card limits by $10,000 could add around $50,000 to your borrowing power. The same applies to any other debts such as buy now, pay later facilities like Afterpay, personal loans or car loans. If you close your debts, you can borrow more. Number 2, reduce your living expenses. Lenders may look at your bank account and credit card statements for the last 3 months to see how much your living expenses are. They also calculate the minimum living expenses for a family of your size and income. And they will use the higher of these two methods to work out how much you can borrow. Most people are spending more than the minimum calculated by the bank. So if you reduce your spending in the 3 months before you apply for a loan, then you can usually borrow more. This isn't always necessary, as some lenders take a common sense approach and know that you don't have to have Uber Eats every night. Number 3, apply with the right lender. Every lender has a different way of calculating your borrowing power, and it can vary quite significantly between lenders. I've seen differences of more than $200,000 between lenders. For property investors, the differences are usually larger than for home buyers. This is because of the way each lender assesses your income, debts, and expenses. For people who have more overtime income, allowances, bonuses, or commission, you may find large differences between lenders because of how much of your income they use. As a general rule, we find non-bank lenders usually allow people to borrow more, and their rates are similar or sometimes a little bit lower than the banks. If your borrowing power is important to you, then your mortgage broker will consider this when deciding which lenders to recommend. In summary, don't rely on online calculators to work out how much you can borrow. The How Much Can I Borrow calculator on our website is accurate, but it's still no substitute for a pre-approval. Assume rates will increase by at least 2% when working out how much you can afford to repay. Closing credit cards, reducing the limit, cutting back on your spending, and applying with the right lender will all allow you to borrow more.